My name is Augie Ilag, and I'm an investor with CMT Digital. CMT is a 27-year-old trading and investment firm based out of the US. We've been investing in the space for over 8 years. We've raised 3 funds, and we partnered with over 100 companies in the space, including FalconX, Circle, Coinbase, Axie Infinity, Athena, EtherFi, and many, many others.
Nice.
And it is my pleasure to be moderating this panel titled The Evolving Asian Web3 Landscape, East and West Divergence, along with our esteemed panelists, Jason Kam from Folius Ventures, Kelvin Ko from Spartan Group, Ciara Sun from C-Squared Ventures, and Steve Lee from Neoclassic Capital. Thank you all for joining. To start, maybe we can just do some quick intros. It'd be great if you can spend a few minutes introducing yourselves, your funds, and perhaps your relevance to the topic at hand. Jason, did you want to go first?
Yes, thank you, Augie. I run Folius Ventures. We were founded about 3 years ago, in September 2021. I spent a career on Wall Street, and sorry, there's a bit of echo. I kind of hear myself in the space. We tend to focus around APAC founders, especially the Chinese ones. As a hybrid fund ourselves, we typically cut $500,000 to $4 million checks into mostly Chinese founders in the region. Historically, our favorites have been 2C consumer applications, games, centralized exchanges, and SaaS software. I'm very happy to be here today. We've backed things like Cadison and Stefan and the likes in the past. So some opinion on my side on how the Chinese founders are looking at the whole space.
Hi, everyone. My name is Kelvin Ko. I'm one of the co-founders of Spartan Group. We started our business about 7 years ago. And we focus on asset management, advisory, and we also have an incubation arm as well as a design studio. So I focus mostly on the investment side of our business, where we have 3 funds. Our earliest fund is a crypto long-short hedge fund that's been around since 2018. And we also have 2 venture funds, one focused on infrastructure and DeFi, and the other one focused more on the gaming, NFT, metaverse, and entertainment space. So we've been investing in this space actively for a very long period of time and supported some of the biggest projects in the industry. Thank you.
Hi, everyone. I'm Ciara Sun, founder and managing partner of C-Squared Ventures. We are an early-stage Web3 investment firm focusing on pretty much everything that's happening in Web3. Primary markets, secondary markets, we're sector agnostic. And we aim to provide not only capital, but also operational expertise for founders and help them to grow in the Web3 industry. And our vision is actually to bridge the gap between West and East market. So this is one of my favorite topics. And prior to fund C-Squared Ventures, I run investments, listing, and global user growth and institutional business for Huobi. And prior to join crypto in 2017, I was doing management consulting with BCG in New York. Glad to be here.
Hey, everyone. First of all, thanks for having us here. I founded Neoclassic Capital, which is early-stage crypto VC based in Florida, Miami. And we are focusing on application and financial service and consumer. And we are backed by Mark Anderson, Chris Sixton of Anderson Horowitz, and a few other folks. Before that, I worked at Block Tower Capital, which is also a crypto fund, for 5 years. And before that, I worked at Goldman Sachs, Singapore, and Tokyo for 10 years. So to your points, any relevant information about this topic is I live in Korea for 14 years, and then US for 13 years, and Japan for 10 years, and Singapore for 4 years. So this topic is always something that I constantly think about.
Great, thank you. And we'll get into, obviously, the topic at hand, discuss how Asia could be different from Western markets from user adoption, developer activity, maybe even regulation perspective. But before that, let's start with just some context. Because I would say, when it comes to Web3 investing in Asia, sometimes the region gets a bad rep, right? Too many scams, talent issues, difficulty diligencing assets are just some of the gripes that I often hear from Western investors about the region. Now, I know you guys don't feel that way, given you have decided to, in full or in part, focus your funds and your careers on the region. And so maybe we start there. I'd be curious to unpack that decision. What gives you the confidence that Asia as a region is worth focusing on for both your funds and for your careers?
I can start. Do you want to go this way?
Any order is fine.
Okay. For the last 6 years, I think we've been very focusing on infrastructure investing. To easy analogy is, I think infrastructure is like a railroad or a highway and all those stuff. I think still infrastructure in Web3 is very little inferior to what you see on the Web2. But we personally, we as a firm, we think that we've done enough infrastructure investing. So we want the people to build something that people can enjoy, such as department store, such as convenience store, such as clothing store. So that's why our firm is focusing on applications. And if you look at the Web2 industry, a lot of fundamentally strong project infrastructure is also born out of Western world. And then that's why I think Western world has a more Nobel Prize winners because they love to think fundamentally. However, those regions that makes the infrastructure more stronger for the user adoption is, I believe, that Asia, China, Korea, Japan, gaming, and consumer apps, making things pretty, making things sexy, making things easy to use. So we, as a firm, we want to bet on US, Japan, Korea market, particularly Asia markets, because we believe that we are approaching to the period where the application use cases, more major adoption for the consumer is imminent. So that's how we view the Asia market has huge potential, and that's why we are focusing on Asia consumer and adoption financial service.
Well, I think like earlier in the years, when they say there's like a bad reputation in Asia, is because Asia was moving a little bit behind on regulatory frameworks for crypto and blockchain in general. So, you know, when you don't have a very sound foundation for compliance and regulations, builders, like, they don't know what to follow, right? And also, there were very strict rules for launching tokens or like operating exchanges in like mainland China, where we see most of the founders in like early 2018 and 2019 in the industry. However, all these have changed with very clear rules in local countries like Singapore. Hong Kong is very supportive, and we've seen exchange license getting approved in many countries in Asia. And also with COVID now is over, travel ban all lifted, we've seen great founders moving into more like supportive countries that they can see as a home base and build their companies. So I think with all of that, Asia has definitely offered a more healthy environment for blockchain industry overall. And I think to Steve's point, when it comes to in-detail user operations, Asia definitely has the edge, right? So infrastructure is more like a Western game. However, for like consumer layer, application layer, like until today, still like the biggest use case and application for crypto overall is exchanges. And all of the top global exchanges founders are Asian. We really understand how to offer a user-friendly like UI UX, and also how to get good liquidity for exchanges and for users to trade on. So in that sense, I think we're still very low in Asia in terms of investing.
Yeah, from my standpoint, I think the comment about scams and so on, I think that's a global issue, right? It's not specific to Asia. And having been in the business for more than 7 years, you know, I think we are able to smell a scam from a mile away. So when it comes to investing, we generally are able to see those and generally avoid those. So that's not a big issue for us. I agree with Steve and Ciara in the sense that I think when it comes to the infrastructure investments, the West tends to have an edge. But when it comes to the application layer, you know, there are a lot of good application developers in Asia, right, in places like China, Korea, India, and so on. So I think that opportunity is coming, and it's coming very quickly. And as a firm, we've been, I think, more active than most other funds in investing at the application layer, because our belief is that for crypto as a whole, right, for all these assets to have value, we need users. And today, that's the thing that's sorely lacking. And you can have the best L1s, you can have hundreds of them, and they can be worth billions today, but eventually, if we're not able to build applications that can draw in the users, guess what? All of this infrastructure is going to zero anyway, right? So it's really critical that we start to commit dollars to bring these applications to fruition, basically. And then specific to Asia, I would say the other thing that's important is the fact that there are a lot of users sitting in this part of the world, right? And whether it's DeFi, and trying to bank the unbanked, or it's finding users that would be willing to test out Web3 games, I think most of the users are here, right? In the Western world, obviously the incentivization that crypto introduces may not necessarily be so interesting to the Western users who are generally more well-off, but in Asia, they care about it, right? So I think user base is here, and if we look at the founders that are sitting in this part of the world, they tend to understand the user base a bit better, right? Because they understand the cultural nuances, they understand the language, the preferences, and so on and so forth. And then the other sort of aspect that I think is important for us also is the regulatory structure in Asia, right? Typically, if we're investing in a Western project, we have to follow the Western regulations, right? And that typically involves a variety of equity plus token warrants and so on and so forth. I think in Asia, we have a lot more flexibility in what kind of structures we can invest in, and that could be good for our returns in the long run.
Well, I generally agree with all of the panelists. Well, like SEC being quite far away, it's nice. I think the users here are very helpful. And then the infrastructure is kind of ready for apps. I completely agree. I'll just add two more things very quick. One is, well, it's the supply of capital, and then it's the supply of talent. A lot of what we do is early stage, seed stage VC investing. The white guy at Andreessen Horowitz doesn't speak Chinese, Japanese, Korean. To get the vibe check on an early stage founder, barely have a product and only a deck that's like crappy in English, extremely difficult. When you can't bomb the guy, you can't cut a check. So I think that sort of ring fence a lot of capital and sort of push them away from a lot of the founders we tend to back, because we can kind of just smell out the scam from a mile away. It's really hard to do when both are speaking English, one of them is broken. So supply of capital is one issue. And this tends to mean that the deals in this side of the world could be cheaper, because half the world can't really invest, right? So that's a competitive advantage that we tell our LPs. The supply of talent, this is more of a Chinese phenomenon, is that ever since the mobile internet era, we have, by our count, 15 to 20 million engineers that came out building on Alibaba, Tencent, Meituan, TikTok. I don't know if you look at the stock chart for Chinese stocks, it's kind of down only like altcoin charts for the past 3-4 years. So for those really good entrepreneurs that came out, really hard to get funding in a Web2 internet startup. Their stock comp package isn't worth that much. If they do build a startup in Web2, the means of exit in A-share, H-share, and NASDAQ are difficult for different reasons. And if they were to pivot to deep tech, they might not have the talent if their expertise has been in building 2C applications. So we feel like their natural place is in Web3. So we have a huge influx of talent by my count. So both combined, it's a pretty fertile ground for good returns, I think.
Makes sense. No, thank you all for sharing. And where I want to go next is actually the investment landscape in Asia, right? You've talked about some of the categories, sectors, verticals of interest already. I'd love to double click on that, right? Because obviously we all can appreciate that crypto is global from day one in the sense that anyone from anywhere can theoretically spin up a decentralized platform. At the same time, as you guys were mentioning, there are certain projects, certain ideas that make sense to be built in certain parts of the world. There are certain ideas that I would argue make sense to be built in Asia because of the developer base, because of the user base, because of the cultural nuances. I'm keen to get your perspective on this question. What are the most promising sectors and opportunities that you see within the Web3 Asian landscape? Maybe sectors that Western investors could be overlooking.
I'll start first, because we went that way. Sorry, I keep talking. We slowed down on our private deployment since the beginning of the year, because TG has become difficult. But there are two categories often overlapping that we're still sort of aggressively looking. One of which is, I would say, mobile-first, entertainment-based money games. Those are the ones similar to Steppen, where you kind of, play with it on your phone. And we feel like the Asian devs, especially in China, they're really used to building something like this. A lot of people sort of manage their life on their phone versus being on a PC. So their expertise means that most of the time, the Chinese devs we see are much better well-versed in building something like that on a phone. And probably they can compete globally in that arena, given the apps that we saw coming out of Web2. The second category is things that go into ecosystems that look a lot like WeChat. And a good example of that is Telegram. So because a lot of them have seen it before, building a product that leverages WeChat and scaling meaningfully with their user base and ARPU. So if they've seen that episode, they know kind of how to deal with a volumetric funnel that has a huge audience, and they know how to scale that user base with the infrastructure that supports it. So when the two overlaps, we tend to get pretty excited.
For me, I think there are two areas that are particularly relevant for Asia. One is gaming, which I think Jason alluded to a little bit, partly because there's already a big gamer user base out here, and secondly, because there is a lot of IP in places like China and Korea and Japan, and a lot of the IP can be reused for these Web3 games. So that's one area we're spending a lot of our time. The other area I would say would be payments, just because I think the payments infrastructure in Asia is still relatively less developed than the West. There are many countries in Asia, so there's exchange rate differentials as well. And then thirdly, there's a large population in Asia that's relatively unbanked. Right? So that, again, is the opportunity for not just Web2 fintech firms, but also for Web3.
I think a few things. First is the Bitcoin ecosystem. It's just like from the beginning of mining Bitcoin all the way until China kind of shut down mining. Asia has dominated the mining power for Bitcoin for such a long time. And until today, still like 80% of the top, say 20 mining pools for Bitcoin still in Asia and Asia founders. So there are a lot of Bitcoin maxis in Asia, and they need to find a good way to earn yields on Bitcoin. So I think that's probably the original reason why a lot of the Bitcoin Layer 2 and Bitcoin ecosystem projects that grow from Asia. That's one sector. And then on the IP side, I really agree with Kelvin. Because launching an IP in Asia compared to launching an IP in the West market is very, very different. The initial cost for launching a successful IP in the West is very heavy. And all the way from creating the contents, creating the IP, until distribution and monetize can be a very long process and heavy production in the West market. However, for launching a very successful IP in Asia is quite different. It's more like a bottom up. You just need to have good character and contents created around the IP, and then going to monetize is quite a shortcut. Say like Nineveh from Disney. It's like one of the top selling IP for Disney, and it's originated in China. And then like Qi, Kawa, and Lupi, a lot of the top IPs. So we think that when it combined with Web3, whether it's a marketplace or like a IP heavy, say like NFT or other kind of projects, there's going to be a huge potential. And then third would be still like marketplace related exchanges or marketplace for other type of things. Either it's NFT or something that grows in the future. We think that Asia definitely has the edge for that. So that's something that we're continuing looking for.
Very similar, but so as I mentioned earlier, our focus is application and consumer and financial service. Within consumer, we picked the three part: gaming, IP, entertainment, and social. Our first investment this year as a firm, it was a gaming out of Korea. I think one just new color that I'll add to the panelists is the reason why we don't see much good, I don't see that bigger potential in Western world is I think I've been looking at the Web3 gaming since 2018. My previous job, previous firm, we led the Dapple Lab investment back in 2018-ish, and then X Infinity, YGG seed round, etc. But I think key difference is Western world, still people are, those who work in Web2 gaming studio, without understanding Web3 much, without understanding Web3 community much, I think trying to build a Web3 game. So suddenly like this look makes sense, but doesn't look cute, doesn't look nice, but it's theoretically makes sense blockchain game. That's the type of games that I see Western world. However, in the Asia world, because the crypto literacy is way higher than Western world, I think a lot of Web2 gaming developers who work tremendous job in gaming studio, they earn good amount of Web3 sense, Web3 knowledge, Web3 community. So all the game that I see in the Asia region these days is they do understand how to bootstrap Web3 community on top of their knowledge to build the game on Web3. And IP, I'll add the IP side. Out of 10 most revenue generating IP in the world today, 6 of them are Japanese. And no one will disagree that they're animation, gaming, etc., etc. And putting the Kevin's point, I think Japan is the most pro-crypto regulation in the world, no doubt. Prime Minister came to crypto conference 2 weeks ago I was in. He opened up the conference, basically saying, hey, youngster, build whatever you want. I'll back you. So that's why we are very focusing on IP in Korea, K-pop, etc. Very potential, as Ciara mentioned, content, and entertainment business in IP. And also, we are very focusing on Japan. We do have a very unfair advantage in the markets. And the 2 other things on the financial service side is I can relate it to IP into RWA space. So I was in RWA summit 2 days ago. Everyone's talk about private credit. Everyone's talk about T-bill, which is 12 billion, and 10 billion is private credit, 2 billion in T-bill at the moment. That's the majority of those RWA tokenization at the moment. But if you really want to build something new on blockchain that didn't exist before in Web2 era, it should be something else. And we believe that IP can be great fit into it. IP tokenization, so you can, for example, I'm Korean as a nationality, so if you like a Blackpink, you can maybe buy some share, IP tokenize IP for their next albums. So you get some revenue sharing, etc., etc. Or you have a privileged prestige access to their community, the meetup or something like that. So that's something that we are excited about RWA space. Last thing I will mention is derivatives. As everyone says, trading volume mostly, majority of trading, Bitcoin trading volume out of Asia region. And Asia people love to gamble. They know how to leverage. That's I think I'm saying in a good way because leverage is a very important sector. And in DeFi space, still derivative volume is way, way, way smaller than spot volume. It's a matter of time. Derivatives on DeFi should be surpass the volume of spot volume. So that's actually for retail. So that's something that we are focusing on in Asian markets.
Fantastic. No, thanks for sharing. Let's move on to regulation, because I do think that is one axis in which this east to west divergence can be seen most clearly. Right? In the West has been somewhat behind on this dimension, most notably the US, when it comes to enacting and implementing regulatory clarity, which is in, I would argue, stark contrast to places like Japan, Hong Kong, Singapore. And so I'm curious to get your view. How do you see the regulatory environment evolving differently between Asia and the West? And what is the impact that will have on overall blockchain development?
I think Hong Kong is a bit of a laissez-faire at the moment. I guess for the founders we backed, they felt safer in Hong Kong versus in mainland China. I think the only color I can provide is I'm not sure if the policy about mining, about OTC, about trading would change anytime soon in mainland China. So as the founder grow in size in their fundraising and as the capital that they command increases, they sort of move further away, they themselves, from mainland China, away to like Hong Kong and then Singapore and Tokyo, and eventually maybe to Dubai if they become really, really sizable. But personally, I thought, this kind of southern Chinese area is a good place for them to launch a business because at least in Hong Kong, Shenzhen is still 40 minutes away from any huge office space. and they can sort of still be very nimble in their building process. But I think the rest of the panelists have better color about especially how Hong Kong, China, Singapore, and Japan has a view on this issue.
I think with respect to regulation, historically, Asia has always taken the lead from the US or the UK, right, just because of history. And they've not had to think about regulations proactively, right, because the equity markets and the bond markets existed way before the Asian financial system came about, right? I think Web3 is interesting because it's the first time that Asian regulators have had to think about it. But what makes it more complicated is that the US has taken no leadership whatsoever when it comes to creating a regulatory framework. Although I'm hoping that in the next 1 or 2 years, we could get some regulatory clarity. Europe, on the other hand, has obviously set up MiCA, which is quite comprehensive in its construct, but having spoken to a number of people, I think they think it is very restrictive, right? And that may, over time, sort of put Europe at a disadvantage. Across Asia, I would say, generally, the regulatory framework is relatively relaxed. I think Korea is probably getting a little bit tighter from a regulatory standpoint. Japan's very welcoming. Hong Kong's very welcoming. Singapore is trying to strike a balance. But I think it is in the advantage of the Asian governments to wait and watch and not to move, too quickly, because the US is going to be the biggest market, right? And they don't have a framework in place yet. So I think seeing what works in Europe and what works or doesn't work in the US may be a better approach, and then sort of trying to figure out, take the best parts of what they have and construct something I think would make more sense. But I think regulators should really, at this stage, focus on encouraging innovation. And if they're going to take any regulatory action, they should be going after the scammers, not the legitimate projects, as typically does happen in the US.
I agree that Asia countries can be a little conservative on the first time they launch rules for an industry. Well, the States has been kind of leading the way for either issuing licenses and for payment gateways and all that. But I think in the past 2 to 3 years, Asia countries is definitely already catch up on a lot of the regulatory and compliance foundation on crypto overall. And for example, say that again, like Hong Kong has issued exchange license for retail users, and they classify NFT as a commodity, and there are a few stablecoin issuers that's getting guidance from the government from Hong Kong, and Japan's lowering tax on unrealized gains, and mid-July, Korea has launched a few documents around launching tokens and for exchanges to oversee token compliance. I think all of this has given a more clear guideline on whether you are a builder for creating projects, getting users, paying taxes, or to better service users in crypto. And I think all of that has been clearer and clearer in Asia. And I think in the next few years, we're definitely gonna doing more investment in Asia bases, as I think that's gonna open up more opportunities for aggregate liquidity and to get mass adoption of users for Asian-based applications.
I'll mention in 2 ways. One is a global scale, the other one is within Asia. So I think global scale, how I see is the particular country had a crypto failures. For example, US, FTX, South Korea, Terra. So I think those 2 countries, and Singapore, a little bit of FTX 3.0, but I think as Kevin mentioned, I think it's more balanced approach, especially they are very progressive in audio space. So I think other than those US and South Korea, which has so much retail the failure, that regulators should come into play, and that they are building very comprehensive regulation. In Korea on July, they released a very big regulation, compliance regulation, which actually tightened up a lot of crypto exchange listing. But other than those two countries, such as Dubai, Hong Kong, or a little bit Singapore, I think those countries are sort of the country that entrepreneurs should be focusing on a little bit if you want to start business, because they didn't have major retail crisis. So that's the way that we look at global scale regulation. And second basket, and within Asia, how I view is in China is more driven by what the state government thinks. And compared to that, Japan is more actually driven by financial institutions such as MUFG, SMBC, and etc. Because that's the kind of institution built up 1990s Japan heydays. Compared to that, I see that Korea is more driven by conglomerates, Samsung, SK, Hanwha. So even Western people very misunderstood that all Asia is the same thing, very different. Each country has a very different major forces that drives the economy, drives the regulation, drive the rules, that you have to specifically really understand the difference between this. So for example, what conglomerate is interested in or what financial institution interest is actually impacting a lot. That's why Japan has the most progressive regulation in STO, because that's what financial institutions care about. They don't care about decentralization. They don't care about the crypto community. They care about STO, which they can leverage their asset on their balance sheet. So that's a two-way I would say, but to sum it up, still US is the US. As Kevin mentioned, still a lot of countries will have to follow what US regulation does. When I actually toured Japan and Korea, meeting all the conglomerates, they had an amazing initiative for the last 12 months, but right after the Bitcoin ETFs is approaching, they pause every initiative because they just want to know how the US treats the Bitcoin ETF, how US is progressing regulation. So that's another angle that is important. US is still US. That's why we are home based in US. I live in US to making sure that we are top on the regulation, what the US is actually playing on.
Great. So we're coming up on time, guys. There are two more topics I'd love to cover, so maybe for these, I'd love your sort of highlights or brief thoughts. But the second to last topic is users, right? This, again, I think is one of the unique things about Asia, that we are sitting in what is debatably the epicenter of crypto adoption, right? Pick your favorite statistic, MetaMask users, global crypto adoption, and you will see countries like Vietnam, Philippines, India, Indonesia crop up again and again. And so let's start with that, right? I'm curious to get your view on what is it about this place? Is there something in the water? Is it the chicken rice? What is it about this place that has led to such massive adoption? And what role do cultural differences play when it comes to shaping Web3 user adoption in this part of the world versus the West?
You want to start first?
Well, I think it helps when you have a big population base, right? And if you look at the distribution of the world's population, obviously a big proportion is in this part of the world. So Asia is important, and any sort of Web3 developer that's not thinking about Asia probably has it wrong, right? So that's the first thing. The second thing is, I think the demographics also play to Asia's strength, because we generally have a younger sort of demographic base, and as you know, younger people tend to be more open-minded, they tend to be more tech-savvy, and tend to be more mobile-savvy as well. So that all, lends to them wanting to explore new things, right? New social media apps, new games, anything that's cool and new. And then I think what is also interesting is the fact that crypto hasn't really moved into the mobile era yet, right? If you look at why Web2 took off in a big way in Asia, it was because everybody had a mobile, right? Even if they don't have a laptop or desktop. And crypto, by and large, hasn't moved into the mobile area yet. So I'm quite excited for this next phase, whether it's via the TON ecosystem or other ecosystem, where people start to focus more on mobile users and make it easier for people to create wallets on mobile, to transact on mobile, to play games on mobile. I think that will really sort of energize the user base out here. And then in terms of how to cater to the audience in Asia, I think understanding the nuances from the cultural standpoint is very important. I think having local language support is also very important, because not everybody sort of lives on English. So I think if we can get some of those things right, then we will be able to attract the Asian users.
I'll do. So I think on top of what Kevin said, I would say crypto to me is cultural movement. So if you think that way, I think the US has more less dense population over the big land. Compared to that, Korea, Seoul, Hong Kong, Singapore, Tokyo, very dense, the basic region. That affects a lot in terms of contagious. Culture is contagious if it's the right culture movement. So I think that's a big part that why Asia is such a, I do this, suddenly my friend, 10 of my friends got to know them. A grandma doing on the Bitcoin trading on train on South Korea. I think it's very population dense, so it's very easy to contagious. And what makes it even more contagious is I think the Western world is more based on Plato kind of philosophy, which is you think, your own opinion, individualism. You have your backing, your national. It's known for the being good that you are putting the different opinion than other people. But in Asia, to me, it's more collectivism is the important factor in this Asian culture. So I like it, and maybe you might like it because I like it. And of course, we discuss, but we tend to be more harmonized as a circle, as a cultural movement. So that part fits well with this crypto movement because most of crypto thing is irrational at the moment. There's no use cases. Everyone is criticizing. I cannot disagree. But I think we believe something irrational. That's all we are here. And Asia is just, based on their history, how they think, I think it's very suited for this betting on irrational, but something that moves your heart rather than your brain. So I think that's what I like about Asia region.
Got it. Great. We are almost at time, guys, so maybe we'll move on to the last question. I'll let my last two panelists, Jason and Ciara, kind of kick us off for this one, because I do want to talk about founders, right? And I think the context that's important here is more and more we are seeing sea turtle founders, right? These are founders who originally are from Asia, maybe went abroad to places like the US to study and to work, and are now choosing to come back home. And that's not an easy decision to make, right? To build there or to build here. And I'm curious to get your thoughts on this topic. And so maybe the way I'll tee up the question is like this. Let's say after the panel, you guys receive a LinkedIn message from an aspiring founder in the blockchain space. This founder is from Asia, but just completed their studies at Carnegie Mellon, or U of I, or Indiana, or maybe NUS Overseas College. And so in some sense, they're just like you, but maybe a little bit earlier on in their career.
Yeah.
They have a great idea, a solid team, an early POC. The one thing that they have not yet decided is, do I stay here and build in the US, or should I go back home and build in Asia? What advice would you have for this person?
We're running out of time. Well, first of all, never reach out on LinkedIn. Always do TG, never on LinkedIn. If it is a highly technical sort of ecosystem, infrastructure-based project, stay in the US. Because the better access to Western funds get them very, very, very long, right? If it is a to-consumer type product, it might be worth coming back to Asia, but be very specific on what kind of users do you want to target. That's my short answer.
I think two things. Whether the team understands the user habits and user behavior in which area is very important. And also look at what kind of data you're trying to achieve, like cost for user acquisition per user, and or revenue generated per user in different region. So just do tons of research and understand your potential user base, and then make a decision from there.
Makes sense. Great. And with that, I think that's the end of our panel. Please join me in a big round of applause for our panelists. Thank you very much.